Hey guys, it's Max. Thanks for joining me. I was bored, so I decided to have a midday live stream. Let's take a look at charts. Also, I was trying to make up because I didn't even have an afternoon live stream yesterday. I just recorded a video for you guys, but I forgot to share the screen, so I decided I might as well just go live. I recorded a video that showed a couple of option trade ideas. But anyway, okay, so let's focus on this for a second. I had to take this bottom line off this chart. See this top red line? That's the top of the November 6th and 7th gap. The bottom red line is right exactly where we are right now. And I wanted to see this. I wanted to see this volume profile over here. So I took it off the chart. But we are at a key area on this is SPX. So this blue line down here is the 200 period moving average. And we slipped through it kind of like a knife through hot butter, but we did come back once and test it and then failed. And now here we are back at our first time back testing again. Now, I was saying something yesterday about the SPY and saying we were over the 200-day. Well, that's not actually correct. On the SPY, we are over the 200-day. SPY pays about a 3% dividend every year, 2.5% dividend. This pays or 1.5%. It pays a really small dividend, but the SPX, the index, doesn't pay the dividend. The SPY does pay the dividend. So presumably, if you were investing in the SPY, this wouldn't be the real 200-day moving average of your results because your results were a little bit better. So it actually, we'd be right where the SPX is. The SPX measures just the total return of the index. So as if there were no dividends. Well, anyway, so we're right there. So what do we do here? Do we fail? That's kind of what I'm thinking, just because it's, that's at least temporarily. I wouldn't be surprised. But let me put this. I guess we need to put the gap back on the chart. Boy, this January 13th pulled back right to the penny, right where that gap started. Let me put this line back on here again. I'll do it right here. Okay, well, there's the line. So you can see we basically, looks like we got over it a little bit this morning and for now have failed at it. Anyway, that's going to kind of be the theme. I'm going to kind of assume we fell at it. And I'm going to show you an option trade that assumes we fall back into range here at a lower level down. And we'll look at the 56.65 strike. We'll do that in a second. But heck, if they didn't find buyers there, it could go lower. But anyway, let's look at some charts first. Let's look at everything else. So let's look at the Qs. Sorry, I'm super zoomed out because I'm trying to show both things at once. The 30-minute bars, you can see them right there. That's yesterday and today's action. Well, the Qs is also right in its November 6th and 7th gap where there was buyers there earlier. Now that we're in a different market, are there going to be sellers there? That's kind of what I'm thinking. I just don't think we'll just go right through it. Let's just say that, but who knows? Anything could happen. All right, so that's the Qs. Let's look at IWM. Russell, well, you can really see the lack of volume right in here. They're even without going over and looking on the chart, I can see where it is. It's right where it's 209. I'll go look just to prove it, but yeah, there it is. It goes, their election night gap goes from 210.86. Oh no, that's actually wrong one. September, October. No, their election night gap gave up a long time ago. They're well underneath it. Their election night gap is up here between 226 and 230. Yeah, there's November 5th. So they were the least bullish in that, they had the shortest amount of a honeymoon with Trump. They gave it up by late December and haven't been back since late January to that zone. But in any event, same theory. I would expect sellers to be here the first time. This one's even weaker than the other two, just on a comparative basis. All right, so that's that. Let's look at USO. All right, USO is trading at a broad range down here between 72 and 74. You can see, that's where it's been comfortable transacting two-way business. Above that, it has not been as comfortable transacting two-way business until you get up to the 77.5 strike. And then there was a trading range up there. Right now, we're kind of in no man's land. Will we fall back into this trading range, move up into this trading range, or kind of establish our own and fill out some volume here? Who knows? Anything can happen. Look at gold. Now, gold's been on fire lately. We're developing a range up here at the 280 level on GLD, but if we reverted to mean, we've been in a little bit of a blow off top. And if we reverted to mean, it would mean having to get through the 270 area. I would definitely expect buyers in this area. If you want to be a dip buyer in gold, here's a shot for you. Probably won't come back there. All the ones that are real obvious like this, they won't. But if it does, that might be a place where you could look for those might be two places where gold's price might revert to, and then there might be buyers there. So we'll see. All right, so that's gold, Bitcoin. All right, I guess we have a wedge on Bitcoin. I just now noticed it, but oh no, that's a moving average right there. So let's see what moving average that is. As a matter of fact, that's the 2600 period moving average. Okay, now the problem is Bitcoin trades 7 days a week. There's more than, how many hours are in a day? 24, 48. So it's 48 half-hour periods. What's 48 times 7? Let's do 50 times 7, which is 350, and then minus 14, so 336. So no, so there's gosh darn it. I just lost it. I thought I had that figured out. So all right, well, 48 times 7 is how many periods there are in a week. Okay, that's what that was, 336 in a week. And I want to do the 200-day moving average. 200 days is how many weeks? 50 weeks or something. So multiply. Okay, so what is that? That's okay, 16.8. So sorry, I know you guys probably are real interested in this, but this is something that comes in handy to do when you want to look at a moving average from a time that you aren't following on your chart. Gosh darn it. We'll come back to this later. I don't want to mess this up. You guys have any questions or anything you want me to talk about? Probably no one's even here because I didn't publicize this in advance. Anyway, somebody that's watching this, figure out how many weeks, or figure out what I was trying to figure out. I know somebody's got me. I just can't think and talk at the same time. Okay, now where is the damn, or the darn. All right, Ethan. Hey, what's up, man? Yeah, figure out that math for me. You bought 8,000 more Alti. Okay, well, cool. Well, heck, I mean, you know, Alti's, it's a good one. Let me ask you this: do you have any GPTY? I like GPTY and LFGY for that matter, in a similar vein as like an Alti. Now, having said that, I don't have LFGY, but if I was younger, I might, or it's just higher risk. But anyway, GPTY is a good one to look at also. You know, so it just depends. Anyway, thanks for being here. All right, let's see what's going on in YieldMax land. Let's look at the buffer report. Well, here we are. We started on the YieldMax buffer report. This is kind of a snooze fest. MicroStrategies is outperforming. That's good. So is JPMO. That's good. So is Fibby. Underperforming, other than ARK and Square, there's not really much underperformance. Here's the index buffer report. Feed and 5E, as usual, up the most. The SPY is pretty much grinding straight sideways. The worst performing SPY-based funds are JEPI and GPIX and T-SPY and SDTY, today anyway. Best performing 5E and WDTE. I don't know why FEET's not up there. FEET's usually one of them up the most, down the most. SVOL's looking good, up a little bit. KQQ looking good. FEPI looking good. Triple QI, Triple QT, all looking good as well. Of course, why Triple Q is pulling back, it's an inverse fund. But CEPI, that's one that's not supposed to be pulling back, that is. CEPI, okay, well. Let's see over here down on the far. We don't talk about these much, but there's Riser. That's a really good fixed income fund managed by Mike Venuto. And he's one of the guys. It's his baby. And that's a great fund too. XOVR pulling back a little bit today, and THTA looking good. All right, so that's that. So now let's look at the Alti grid. Now this morning I got this messed up somehow. Is this Alti? Okay, yes, this is Alti. Alti, the average stock in Alti's universe is down 1.1, but now Alti's up because it's trading. Man, that's a good look there. When your average stock is down, but you're up. But that happens in sideways grinding markets because the time is decaying off the options you're selling, and it's just, you know, so you do well compared to somebody that just has the stock. All right, that's Alti. So now let's check LFGY. I think it is right here. Yes, LFGY is pulling back a little bit. The reason why I compared LFGY and GPTY to Alti is they're both funds that also sell options on extremely volatile stocks, and therefore should be able to pay a pretty good little amount. As far as the yield goes, the dividend goes, the thing that Alti does is they use option callers, and that's where they use part of the proceeds from their covered calls to buy put protection. And anyway, it doesn't keep it from dropping, Alti. I mean, but it keeps it from dropping as badly as it could. Well, GPTY and LFGY have similar mechanisms, and I'm really not so sure I don't prefer the way GPTY does it. But I have both GPTY and Alti. And I mean, at some point, I would probably like to get LFGY back again. Also, LFGY does have some kind of catastrophic type hedge, deep out of the money type protection. I haven't looked into it that much, but I think GPTY does it in a really sane way. Buys protection, because you can buy too much protection. You can be too protected. And Charles knows about this. Well, Charles is never too protected. He's always right. Perfectly protected, right, Charles? Okay, what are you saying? YieldMax is out there. Daily covered call ETFs, synthetic out of the money. Yeah, that's SDTY is the name of that. In fact, we can look at the. Let's get them FinViz and then look at that SDTY. It hasn't been out too long. They're trying to copy XDTE because they don't sell options till the morning. So if there's an overnight gap, they monetize it. And they're also trading. Jay's also rolling. He's managing around the position aggressively. I'll show you. We'll take a look. We'll see what we did yesterday. Anyway, here's SDTY. But yes, that is the new YieldMax synthetic. I think they're trying to, I get the idea they're trying to compete with Roundhill or whatever. They're trying to take some business from Roundhill's slice of the pie. Now let's look at the flows. They're up 300% year to date. Let's look at it here as far as creations and redemptions. They had a big creation on February 10th. They had a big 9.4 million they had a 1.1 million under management on March 4th, but that made their total up to 9 million, which is where they are now. And it's not putting a dent into old XDTY or XDTE yet. I can promise you that. Let's look at XDTE. XDTE's been just a phenomenal success. But so have a lot of these. The YieldMax, YMax has been a big success. I mean, half the things in the YieldMax universe have been a big success also. Heck, how much money does Alti have under management? Alti has some good money under management. But this thing, look, this thing's bringing out lately. But look, the past month since these other funds have got in, they've been having some money come off their book. They kind of topped out. Also, the market topped out at the same time. So that, to be fair, they had some people probably got scared and sold their positions probably at the wrong time. That be that as it may, they pulled back from 430 million to about 386, and they have had some money come out. 9 million came out in one day. Anyway, all right, but yeah, so they have YieldMax has SDTY and QDTY. Is QDTY out yet? Yeah, QDTY. And there's RDTY. I think it's out now. Let's see if QDTY is out. But anyway, yeah, these things ought to be good. What do you think about them, Charles? Do you got any, or you got some hips? Yeah. Oh gosh, darn it. Okay, I talked with who's the guy that manages hips? It's Granite Shares, right? Isn't that? I was talking with Will from Granite Shares about hips. At the time, it was like a year ago. And at the time, they didn't have any high income products. Let me see if I'm right here. Yeah, Granite Shares hip. Now this has what, bonds and closed-end funds and limited partnerships and stuff like that in it. Let's take a look at this. I mean, Granite Shares does a great job. I would bet this is a good fund. Look, its NAV's been really good. Steady NAV. Paid about a 9% dividend over the past 12 months. Bringing money in. 1 year return of 11%. It's good fun. But yeah, it's that. What's the management fee? The management fee is or expenses. Yeah, $1.99 or 199 bips. That's insane. I will say this: you don't see many of these high yield funds that are above their moving average. I mean, but that's good. Okay, so let's check out Alti. Oh, and I need to check out my own portfolio to see if I'm still outperforming. See, Alti is probably never going to be above its moving average, but that's just kind of the way it trades because but there are times it gets above it for a little while, but you don't trade these on technicals. It gets above it for a little while, then it pays out a dividend. If you put the dividends back in here, it would constantly be above its 20 period, I would think. But I just look at it like this. All right, well, that's Alti. So what about money under management? Now, they brought a lot under management back in June, July. Now, did they bring some in October when they switched their formula? There's October 17th. 14 million hit that day. But then a ton of it hit on November 15th, right after the election. Well, and Jay was on the right side of the election trade. That was probably the money manager that did that made that move. The guy that about that 35 million was probably one of our, listening to my channel. He's probably listening right now. It's probably Charles. Charles is about one of the smartest money guys that it's probably Charles. Charles, did you load up on Alti back here? I mean, my Lord. All right. Alti, let's see. What else can we check? Let's check LFGY. Then we'll compare a couple. Then I'm going to, let's compare a couple. Then I'll take a few questions, let you guys go. I appreciate you guys being here. Oh yeah, and I was talking about an option trade. What do you want to try? And we'll talk about that later. But anyway, LFGY, are they bring? I want to see how much money they have. About not a lot of money under management. Just 77 million. That's not bad. They got 4 million in the other day. Okay, well. All right, let's do a little of this. Let's compare GP, or let's do this. Let's do it's way too early to tell, but let's do SDTY to XDTE. This probably is not going to be statistically significant. I only know I'm doing it. Boy, that is just identical. Would you take a look at that? XDTE has him edged by a little bit. But, wow. Now, let's look at this, though. So, this is an eighth of a year, exactly. 0.12 is 1/8. So, what's 8 times $1.55? Last time I tried to do math in my head, it didn't turn out well. We'll just call that 8 times 2. That's about $16. So, call it 15.5 or something. You'll pay about 15.5 on a $45 stock. This is about 33%. 15's a third of 45, right? Okay. So this one's paying about that, Now down here, SDTY paid $1.13 for an eighth of the year. So multiply $1.13 times 8. It's $10, $9, something like that. On a $46 stock. So 20%. So less. Wow, I didn't. That kind of surprises me. Let me. It could be a difference in the timing of the way it's early. It's early, but anyway, it looks like SDTY is going to pay a little less than XDT based on a very preliminary results. All right. Well, let's look at. Let's compare. Let's compare GPTY. Let's go back to talk about Alti and GPTY and LFGY and all those. Let's do GPTY to Alti. Wow. Okay, that's close. Now Alti has it edged. Alti has it edged out. Not a lot of information to go with there. Now we've already figured the Alti dividend with more than 100. So the GPTY dividend, I think I figured this one too. 212. This has sounded very familiar. But anyway, 15 is, what's that, 1/6 of a year? So 15 times 6 is kind of 6.5. I get about 30%. I just did it in my head real quick. About 30 on GPTY. Quite a bit more on Alti. So, but it means GPTY likely will have steadier NAV. And in fact, I would almost bet it would. GPTY has more. Let's look at this real quick. GPTY has higher quality companies, less risky companies. We'll look at GPTY's holdings. This is basically just you could call it a Mag 7 fund, basically. Or you could call it FEPI. You could call it Yulmex's version of FEPI, kind of. And people love FEPI, and FEPI's been great. It's a big data fund. Big data and big tech. Big data and big tech. Look, NVIDIA's the top holding. C3 AI's second holding, then Planeteer, then Apple, then Advanced Micro, then Facebook, Microsoft. It's this is just as blue chip as it gets. Snowflake, Alphabet, Broadcom. Now it's blue chip with a bent on communication technology. With the I'd call it big data, maybe, or you could even call it AI, but it's more the data side of AI, right? because they also have, I believe CRM is in there. Anyway, now let's just for comparison and contrast, let's go to LFGY. Or we were going to compare with Alti, but we'll look at the companies in LFGY and Alti. But those companies, to me, are similar. They're the higher risk companies. Okay, so they have MicroStrategies, Coinbase, Ibit, CleanSpark, Mara, Core Scientific, Riot Platforms, Riot Blockchain or whatever, Hut 8, Opera. So those funds are, that is a volatile little index there. I mean, how long has this fund been around? It's been around for a quarter. I was just looking at this. It's already paid a 12% dividend in a quarter. So, you know, that's probably going to pay pretty well. So I would think LFGY and ULTY risk-wise are good companions. Now let's see. All right, the top holdings in Alti's portfolio are, oh, you got to love some triple leverage Qs. Tesla, that's hurting them, but lately it's bouncing back. NVIDIA, some leverage small cap stocks, Planeteer, some MicroStrategies, leverage semiconductors, a little Upstart, Carvana. Look at Carvana. I haven't noticed that. Carvana is the stock to have. Why don't I have call options on Carvana? Gosh darn it. Let's see. Well, we'll take a look at Charles's question in a second. Or Charles doesn't ask questions. He's probably telling me something. Or making a comment. Well, I was trying to take a look at Carvana anyway, but look at that. Boy, that's a big gap and go yesterday. A big open gap, $4 or $5, and it opened there, closed on its highs. I mean, now we're right up at the 200-day. I mean, you know, we'll see what happens, but that's been a heck of a recovery. All right, let's go check out Charles's comment. So Charles is wondering how at the money covered call funds compared out of the money. Well, if you look though, we have history on it because Global X, XYLD is at the money covered call funds, and or you could also look at QYLD. QYLD is at the money covered call funds. You could compare that to JetQ. There's a little differences, but JetQ, they do the out of the money methodology. You could also compare it to GPIX. They sell out of the money. Bali, I think, sells a little out of the money, and they don't sell for the full portfolio. But there's examples of it. But the best example of how a full covered call fund would do, let's just pull it up. Let's just say we'll just do QYLD, and we'll look at JetQ, and we'll go back since inception. What in the heck? Come on. I took the Wi-Fi extender outside yesterday, and it's because I should be outside. Why am I not outside right now? What in the heck am I thinking? And what is this freaking clickbait? QYLD versus JetQ. Just show me the results. Come on. Okay. So, the at the money, what I would expect is less upside. But I would expect more relatively, I would expect a higher dividend on a relative basis because at the money brings a higher premium than out of the money. Now, that doesn't have anything to do with total return, but just as far as the premium goes, usually they take the premium to pay the dividend. Now, having said that, both of these guys manage distribution. So you can go to Global X's website and it shows you how they've done every month in their history. They make usually 2.5% or something, but depending on market conditions, but they pay out 1% is all they pay on QYLD. So it's a perfect, 12%. They keep the rest to protect the NAV, but they need to, and which is great, but gosh darn it, why is this only going back to 2024? What in the heck? All right. Sorry about that. But QYLD's NAV, like a lot of people's, did not do great in 2022. It doesn't look that freaking bad on this chart, does it? I mean, both of these have been good, but you can see the difference. JEPQ catches more upside. You write those out of the money options, you catch more upside potentially. Now let's see if my theory's right. If my theory's right, QYLD's dividend should have been higher. Although, like I say, since they don't pay out all of the dividends, so we really can't tell just by adding up the dividends. But now let's look through a bad time period. Let's say if we would have bought that right at the end of 2021, December 15th of 2021, and then, and then held it to like 2023 or something, which would have been the wrong thing to do. Well, let's just see how it'll come out, but it could happen. All right. So we have QYLD is less total return, higher yield. I mean, and QYLD's yield is higher than JEPQ's also. QYLD pays 12, and JEPQ's pays 9 or 10 usually. It depends, but so that it totally makes sense. JEPQ's if you want upside, QYLD's if you want downside. I mean, if you want to have more, it's not if you want downside. What am I saying? But I don't know why a person would use QYLD. I mean, you could, but there's just other funds out there now. Let's look at this. Let's look at XYLD, which is the SPX version of the same thing, compared to JEPI, which is from JP Morgan Covered Call Fund. And we can see over 2021, 2022, XYLD just got beat up pretty good. Look at that. It was down 15%. But if you remember, the market was down, 35% from peak to trough at the worst. So, I mean, and then the market was down 20% on the year. This was only down, well, this isn't for the year, but this was not down, this is down. It looks like a little bit less than 20% on the year. It looks like it was down about 10%. So that's the buffer coming to work for you. So that's, but I think that's the only at the money covered call fund that I know of is Global X. But they have such a good, if you really want to get into it, started. They have a whole section on their website in white papers, and they have every month's results going back into it's a great way to back test ideas. It's a great way to back test ideas. They have one of the best sites in business. All right. What's going on, Ethan? You want a short SQ? Oh, you want a will S triple Q. Well, I don't know. Let's look at that real quick. So let's see. You'd will by selling a naked call, and then if you get, let me show you how I would do it. If you think it's going down, maybe do a bear call spread, but maybe just do it on the Qs instead of the triple Qs. But since you asked about the triple Qs, all right. So let's see if what we can do here. I wish I had an ETF that traded inverse like this. I mean, they do. I guess they do. They sell puts, but that's triple Q for the end of the week. I mean, 62% chance of profit, $45 credit on $500 loss. I just don't like that much. $40 credit on $260 risk. I mean, these leveraged, I would probably just do it on the regular Qs, and I bet I could move it further away. I don't know. I don't, I'm just not really liking much of what I'm seeing here on desk triple Qs. I'll just show you the way I would do it. If I would got to the end of the week, selling out of the money call, something like that. Okay. And then if I put, let's see if we could do this. Something like this. Let's see. Appreciate your patience. I'll share this one in the comments in case anyone wants to do this. But I would, if I wanted to do the reverse wheel, I would do some kind of structure like this. Potentially, I would make sure that the Qs aren't going ex-dividend anytime soon. But just because I wouldn't want to get this short call. But anyway, it's not the end of the world. But assuming that's not happening, and if it was, you'd have to trade MDX. But anyway, this is fine. This is fine right here. So this trade isn't the greatest trade I've ever come up with. Let me keep messing with it. All right. Yeah, this one's not bad. About 64% chance of profit. You get a 20% yield. But if you get a down move from the market, if the market is topped out here and is going to pull back, especially, between now and Friday, you still have you're selling calls to pay for that put. But you don't need to you don't need it to go down there. That's fine. If it just goes nowhere, that's fine because you saved enough money. You're just playing for this credit in the middle. And if it goes up, that's fine too. You just don't want it to go above 495.50, which isn't like a whole lot of cushion. So, I don't know. Anyway, let me save this trade. I'll put it in the comments. All right, let's hear it. If Charles says it, it's you take it to the bank. Charles is saying something's easy money. So what's Charles say? Build a 3-fund portfolio, income, growth, and value. Yeah, so dips. So Charles, okay, dips and selling 100 puts in the Qs against it. 250. I love Charles's strategies. As always, he's delta hedged. I need to wrap my head around this. So yeah, it has a ton of share price. Yeah, drag. Okay. That's why I switched to Qs. Okay. But anyway, but I just like the way I sell call spreads on the Qs sometimes. You just got to make sure you don't do it right around when they declare the dividend. 250 shares for each $5 white SPY. Oh yeah, I see what you're saying. So you own dips. You own the company dips, which is Inverse NVIDIA. And you're selling, I don't get the next part though. You own dips and then you're selling 100 day puts and Qs against it. Oh, 100 days till expiration. Okay, you're long in dips and you're selling put. So okay, you're long in dips. That's a bet the market goes down. You're selling puts in the Qs. That's a bet the market goes up. 250 shares for every $5 widespread. I get it on the Qs, 20 delta. Yeah, beautiful. Beautiful. That's, I love it, Charles. I guess I should have put this up while I was talking about it. All right, guys. Well, I love it. I love it a lot. Guys, I appreciate y'all for being here. It's 1:30. I don't know if I'm going to be here at the end of the day. I probably will if I'm bored. I'll probably be here after the market closes. Let's see if the market's moving. The market is just grinding sideways. I have a second screen down here that I'm just grinding sideways. I made this yellow area, the election gap. I should have made it orange. I didn't even think about that. I was trying to make it significant somehow. Let's see if we can do that. We'll do it orange. Might be like this. Anyway, that's the election gap. We're inside it right now. We'll see. Will the bears kick us out of it? Kick us back down here to 560? That's more what I was thinking. We talked about no option trade, or we did that option trade in the queues and that's what I was going to do. All I was going to do is I was going to do a SPY put butterfly, or actually a call butterfly. I was going to sell an in the money call with the 560 strike, put a butterfly around it, and then for Friday and look for lower prices. That'd be one way to do it, but I like the way I did it will work also. All right, well, guys, I appreciate it. You guys have a wonderful afternoon. Thanks for being here. And will the NAV improve on Alti? Well, gosh, I hope so. Let's look at that. Let's look at that real quick. I'm going to go to TradingView here because TradingView can do something the other ones can't do. And I'm going to turn off this other stuff. We don't need to see this other stuff. The 200-day moving average is interesting. It's great that Alti took back its 200-day moving average. Okay, will the NAV improve on Alti? So let's see. The NAV has improved from 610 to 678 in the past week, but the stock market has been on a face-ripping rally. So yes, as long as the stock market continues on a face-ripping rally, we'll see the NAV appreciate. The NAV, but Alti's NAV is pretty much at the will of the market as far as the general trend goes. Now, Alti does special, they do buy put options on their individual stocks, and they have ways to kind of control the downside, but I can't stop it from going down. Here's the good news though. That's a 30-minute chart. Let's look at a longer chart. Let's look at a daily chart. We don't even have a 200 period moving average on the daily chart because there hasn't been 200 days yet. But what I wanted to illustrate was this. That's a daily chart. Most packages show you this chart of Alti. We just looked at this in FinViz, and that's all they show you. So, I mean, you can see since this fund's gonna, even when the market was going good last year, this thing lost half its value. That's just kind of the way this type of fund works. It's paying you 100% dividend, but if it loses half its value, plus 100 minus 50, you still have a total return of plus 50, right? I mean, it doesn't quite work out like that, but yeah, these really high yield funds, because the yield is so high, the NAV is going to be under pressure. But they pay a high enough yield, and the way you can see if that's true or not, you can right click on the chart, and you can go to settings, and you can click where it says adjust data for dividends, and this shows you with the dividends factored in. And if you bought this company, this ETF, on the first day, it was trading around 729 or something, and it's right back about where it's been. So you're about even. So let's see if what I said is working out so far. So let's see if my little scenario is working out. First of all, I'm going to compare it to the SPY. We're going to put the SPY down here. So you're even in a time that the SPY went from 500, that's easy, 500 to 574. You're even in the time the SPY went up 75 points, which is 15%. Okay, so let's look at it this way. Let's take the dividends out of the equation. The NAV is actually from 20 to 7 down 30. Okay. 20 to 7, that's 65%. Down 65%. What do you think the dividend's been in the past year? Well, I can tell you, I mean, it's been about 100%, right? I mean, I've been watching every month. So what's the total? The total returns the difference. So we can just tell it. Let's just go look. So let's do ULTY. We'll do it for the past year. and we'll compare it JEPI just for fun. But so March 25th. March 25th, a year ago. See how it works. But yeah, I don't want to say the NAV's designed to go down, but it's gonna go down whenever they pay 100%. It has to go down. I mean, somewhat. You know, the whole game is it's not going down as fast as the payment. That's the idea. There's no guarantees though. All right, so March, we'll do that from 24 to 25, and let's see how it kind of actually did, and see if my little simple synopsis is anywhere close to correct. But it is, the total return equals, you can do this on any stock. Okay, so Alti's NAV went from 18 to 7. It was like I was saying, their NAV that's how much their NAV was down. But they paid $11 in dividends. So they lost from 18 to 7 is what's 18 minus 7 is 11 something. And they paid, they paid 11 something in dividends. They've paid about exactly what they've dropped so far. They're down. In other words, they had a 65% loss in NAV, but they've paid, more than that, or about the same amount. So as time goes by, if we do another year and that's just like this last year, they'll be well ahead. But it just, but they can't do anything about the price dropping. But anyway, what I was going to say is total return equals NAV return plus dividend return. So for Alti, the NAV return was negative 65. Okay, well, the total return equals negative 4, so we could figure out the NAV return. So the NAV return is negative 69. Yeah, negative 69, because then plus negative 4, which would be negative 65. See how that works? But so anyway, the NAV, but yes, Alti's NAV is probably never going to be great, but it's you're buying Alti for the dividend. That's my answer to that question. Yeah, text me on Discord. You have it. Yeah, I know. I figured you were, Ethan. All right, sounds good. That sounds good too. Yeah, okay. Charles is agreeing with me, which not unless they withhold some of their divvy. Okay, that's what I just said. I said Alti's divvies or NAV is never going to be, you're buying that thing for the divvy. But it's something to be aware of. And what I always say, only use as much of these funds as you need to for the income that you require. So hopefully, and I know Charles has most of his money, and most of us do, in long dated bullish stuff. So but this is just for very small portions of your portfolio, because you can turn a small portion of your portfolio and turn it into a check, or of a decent amount in retirement. So, but anyway, obviously, because of all the problems with the NAV, that's exactly why you wouldn't want to have it. You wouldn't want to have like a 50% position of your portfolio in Alti. I mean, I wouldn't want to. But a 3%, 3% can be really nice, something like that. But it's talk to your planner. This is the fun part, is figuring out the details. All right, guys. Charles, thanks for being here. Grateful Trader, thanks for being here. I appreciate you guys. Anyone else that was here, appreciate you guys. And you guys have a great day. See ya.